You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader. Want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Tuesday, 2nd day of June, 2020. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side, click the big microphone. Follow the instructions. In about 30 seconds, you'll be registered, and you won't have to do it again. What'll happen is you'll get an email every day that tells you the show's about to start. And then when you're ready to join the show, you join by clicking the link in that email. So you have one-click access, no logging in, none of that, okay? Now, that's not always an option, and so if you're away from your desk or your desktop, you can point any internet-connected browser to cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds, but there isn't a chat box there. So following those instructions, homepage, click the big microphone, follow those instructions, that's your best bet, because that's always going to log you in when you can with the chat box so that you can actually ask questions and participate in the discussion. Also, we do stream live during the daily broadcast on YouTube, Facebook, and Twitter. Okay. All right. On my screen right now, there's a couple lines from a song that I can't seem to get out of my head today. My heart needs a surgeon, my soul needs a friend. So I run to the Father again and again and again. Perhaps you can relate to that. Now, I sent out a link Sunday morning. It was my Sunday morning gift. It's to a worship video called, the song is called The Blessing. It was written by Carrie Job and her husband Cody Carnes and Pastor Steve Furtick and some other members, I think, of the worship team at Elevation Church. If you just Google The Blessing, the first thing that pops up will be the video to that song. And I know that some people prefer, the old style traditional hymns. This is an example of what modern worship has evolved to. I think if you take a look, you might like it. So let's open with a word of prayer, but even before that, let me give you a scripture. 1 Timothy 2:1-2. It says, "First of all then, I urge that petitions, prayers, intercessions, and thanksgivings be made for everyone, for kings and all those who are in authority, so that we may lead a tranquil and quiet life in all godliness and dignity." When you turn on your news here of late, there's two things you don't see. Godliness, three things, four things. It's not tranquil, it's not quiet. I don't see much godliness. And certainly no dignity. Father, we come to you today in prayer. We thank you for your blessings, for your mercy, and for your grace. And today, Father, we pray for our president and vice president, members of the cabinet, along with the members of both the House and the Senate, to make decisions today that will lead towards a more righteous, peaceful, and orderly America. God, we ask that these leaders lead us to ways that represent you and your ways, including decisions that will lead toward the dignity and sanctity of all human life, from conception until death. And we pray, God, that these leaders provide ways for our nation to be secure from terrorism inside and outside the borders of America. And God, we pray that you would miraculously give unity of thought and strategy for the good of our nation between the White House, the House of Representatives, the Senate, and every single American. These things we pray in Jesus' name. Amen. Okay. Yesterday we started something a little bit different. We're going to continue in that vein. In that, I'm going to give you the big picture numbers from around the globe. Then if Michael's ready, he'll pop in and do a recap of what happened in the live training room this morning. Then I'll be back and we'll do a big picture walkthrough of the S&P on the daily chart, as we always do. Then I'll segue right into the alerts and the 30-minute charts. Someone had thrown that out as an idea for perhaps a little more continuity, so we're always open to suggestions. It's very rare that we change anything, We haven't changed a rule in our trading or a line of code in our indicators for, I'm guessing, 8 years now, maybe 8 years plus. So when it comes to that, we're pretty much stuck in our ways. But if it has to do with a way of presenting it in a manner that makes it easier for you to understand and to put into perspective, then in that vein, we absolutely are open to your ideas and suggestions. All right, so I'm going to give you the numbers now from around the world. These are the cash markets, or the indices as they're called. The Dow's up 138 points. The NASDAQ, on the other hand, is down 27. Something's wrong with that picture. The S&P 500 is up 7. The Russell 2000 is up 9. No movers, no shakers. In the commodity basket, crude oil up 79 cents, trading 36.23 last. That's a gain of a little over 2%. Gold down 14 bucks, trading 17.3620 last. In the Asian markets at the close, the Nikkei posted a gain of 263 points, over 1%. Shanghai gained 6 points. The Hang Seng gained 263 points, which is a gain of a little over 1%. And in the European markets at the close, the FTSE up 53, the DAX up 434, the CAC up 96. So for the FTSE, a gain of almost 1%. For the DAX, a gain of almost 4%. And for the CAC, a solid 2% gain. That gives us a green day in Asia, green day in the UK. And it's a mixed day here in the US of A, with the NASDAQ being the only index in the red of the major four, Dow, S&P, Russell, and Q. All of them solidly in the green, the exception of the NASDAQ, down 27 points. So Michael, if you're ready, it is at this point that you would say, okay, I'm ready.
I'm ready.
All right, fair enough.
I was just looking at the numbers on the day, just around the globe.
I'm sorry?
I said I was just looking at, charts
Okay.
of various news events around the globe,
Mm-hmm.
and you can see this whole thing has affected the whole world.
Sure.
And
Now, we had
All right.
no major economic events today. Let me just take a peek at tomorrow.
yeah, tomorrow,
See what
Thursday,
tomorrow
Friday.
brings. Okay, I've got your charts up, locked and loaded. You're looking at your news, and I'm looking at mine. Tomorrow morning at 3:55 a.m. Eastern, we've got high impact out of Germany. It's their unemployment numbers. And then we've got at 4:30 a.m. Eastern, we got some high impacts out of Great Britain. And then here in the U.S. at 8:15. Now that's an odd time.
It is.
I don't remember seeing 8:15 before. ADP non-farm employment change. And they're forecasting a negative number of 9,000. Then for the remainder of the day, the next high impact would be crude oil inventories here in the U.S. And then that's it.
ISM non-manufacturing PMI too.
What time do you show that one at?
10 o'clock.
10 o'clock U.S. Oh, yes, I looked right over that one. I've showed that as a high impact as well. ISM,
Yep.
non-manufacturing PMI. Forecast numbers 44. The last time out it was 41.8. So that one, 10 a.m. Eastern tomorrow, definitely has the ability to move the markets. Not forecasting it will, but it certainly has the ability to do so. And with that, I will hit mute on my end and turn it over to you.
Okay, great. Okay, you see these charts I'm looking at here are just you can see when the virus came. It was right here. And this one.
You don't hear so much about the virus anymore, do you? I mean, when you turn on the TV, it's like 90% about what's happening in our streets, the violence that's erupting. Police officers were shot last night.
Really?
Yeah. Now, the president says he's had enough, that he's finally going to put his foot down. What that means, what that's going to look like when and as it happens, none of us have any idea. I don't anticipate seeing an armored tank rolling down the street of my master planned community. But in downtown LA, downtown New York, downtown Washington D.C., I mean, it's possible, folks. We're at a place we've not been before. I know there were riots back in the 60s, and I showed you guys yesterday on the show, and with that post that I put up, I showed you just a couple glimpses of history when there were riots on American soil, and it was the 60s race riots and the Democratic Convention that I highlighted. Those are just two little bits of history I pulled out to see what it looked like on the charts, and it bore out what I had said, that war, not good for people, but surprisingly, sadly, good for the markets. And by good for the markets, I mean when there's war happening on foreign soil, U.S. and foreign soil war, we tend to see higher prices in the markets because the whole industrial military complex, blah, 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 cranks up. Okay, I'm hitting mute. It's all yours.
Okay, here we go. Good afternoon, everybody. Today is Tuesday, the 2nd day of June, 2020. If you have not taken a free trial with us, go to the homepage at CFRN.net. And right here, if you scroll down, you'll see it says free 5-day trial. I don't know why I always yawn when I start doing this every day. Free 5-day trial, no credit card required. You click on that. Click on that. And you get to this page, eminitrainingschool.com. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you, and hit the send button if you want to. Once you hit the send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? We don't know that you took the free trial until you click on that confirmation link. Now, results. Okay. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 2nd day of June, 2020. Today we lost 1 tick in gold. We're up and down in gold today. And we made 16 ticks on the ES. That put us at plus 190 on the morning session. Today it took 7 minutes and 1 trade to get to the goal for the day. At that point, we're at $100 a contract, and we took a total of 9 trades. Is that right? 9? Oh, I'm looking at the wrong chart. Hey. And yesterday it took 12 minutes and 2 trades. So on the month now, we're at $580 a contract, and that's over 2 days, averaging $290 per contract per 2-hour day. On the year now, we're at $36,995. That's over 99 days, averaging $373 per contract per 2-hour day. And again, as you'll see, I miss a lot of the trades because I'm training. Once I get the goal for the day, then I kind of switch modes. But there's some really nice trades today, especially the YBR trades. There's some really nice YBR trades. And I'm going to hold a special webinar just to go over the YBR at some point. I discuss it in the morning session. But at some point, I'm going to do a special webinar just for that. Okay, so on gold, we stopped out on our first trade. Right? Then there was a YBR trade right here that would have gotten it right back. Another one here and here. and then flipped around, gave another one there and there. We had a shorting opportunity here using the trade setups that we do in the morning session. We had a shorting setup, a shorting trade right here, and we missed that. Now, when I say short, I mean sell. It would be a selling opportunity. Then we had 3 buying opportunities right in a row right here. Okay, and 1 selling opportunity there. And then we had a selling opportunity there that we picked, and we got 5 ticks profit on that. Then we got 10 ticks profit on that. And then I stopped out again on that. So that's what I meant. We're up and down on gold today. Let's see. Getting into the close, there was a shorting opportunity there, during the break, and a buying opportunity right there, and then during the break, see how we had all this movement right here. Our one shot at getting into that was right here. For that leg down. Now, I don't know what happened to make gold drop like that. I suppose I'd probably go buy a newspaper, turn the news on, or something. But I'm just opposed to that. Right here was a long opportunity. Right here was a long opportunity. This is all during a break. See, there's some nice moves here in the break. There was a short right here, a short right there, a short right there, a short right there, and there. So gold had some pretty good movement today. And remember, we're on the Q contract on gold. Now, we didn't do anything with the euro today, but that's not to say that there wasn't anything to be done. There was a long opportunity right here, a long opportunity over here, a shorting opportunity right there, a long right there. And this is during the break now. There was a shorting opportunity right there. And that was pretty much it. Okay. Now, crude oil. Where are we on crude today? We just took 1 trade. Break even. 1 break even trade right here. That was at the beginning of the morning session. Now, we have the API numbers coming out today at 4:30 p.m. Eastern. And that'll help define what the day's going to be like tomorrow. And then I'll be able to give you a new crude number. Last week, my crude number was 32.23. And we hit it a bunch of times, but now it's just running up. But there was a long opportunity right here that I missed. Really, that's it. And what was my number for the ES? 3034. And we hit that several times too. That was from last week. If I go here to, let's go 1 hour chart. Let's see, it was last week on Wednesday, which was the 26th. Come on, charts. Scroll over. It was last week on Wednesday, the 26th. And at the time I said it, it's right in this area right here. I said look for us to get to 3034. And we got to it several times. And I'll give you that same information tomorrow. Okay. Once it's available to me. Now on the ES, we just had, I'm looking at the wrong chart. We had 4 trades. hold on. Here we go. This was our first trade. I think it was our first. I keep looking at the wrong page. This was our first trade of the day. It was right here, and we picked up 8 ticks on it. Then we really didn't have much. No, I suppose there was one that I missed right here. That would have been a long trade. Then it got pretty choppy. We had a break even right there. We picked up another 8 ticks over here to put us at plus 16. And I know we had, there it is, one more break even. Okay, and then we get into the break. And during the break, it was pretty much sideways. You know, a little bit of an upward trend. I suppose you could have taken a long right here and right here and right here. But that was the morning session, guys. So back to the spreadsheet. Today is the 2nd day of June, 2020. We lost 1 tick in gold. We made 16 ticks on the ES. Puts it plus 190 on the morning session. Today, it took us 7 minutes and 1 trade to get to the goal for the day. That went up $100 a contract, and we took a total of 9 trades. On the month now, we're at 580. That's for 2 days, averaging $290 per contract per 2-hour day. On the year, we're at $36,995. That's over 99 days, averaging $373 per contract per 2-hour day. Back here, if you have not taken a free trial with us and you want to, go to the homepage at CFRN.net. Right down here, it says free 5-day trial, no credit card required. Click on that. It'll bring you here. And once you get here, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. You can hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay. If you don't click the confirmation link, we don't want to leave you to the free trial. So you can do that. All right. And with that, you can pass it back out. Fabulous. Phoenix, Arizona, overlooking the South Mountain, America's largest city park. Dwayne, if you are ready. And there he is.
Okie dokie, I am ready. So,
Good.
recap of the recap.
Today took 7 minutes and 1 trade to get to the goal for the day. At that point, we're up $100 per contract.
Good job. Very good. Very good. Okay. All right, guys, we will dive right into daily chart of the S&P. We had the bearish cross back February 27th at a price of 32.72. The pandemic crash took us to a swing low on March 23rd, up 21.74. That was the swing low price. When price cannot go any lower because of buying pressure. Now, and that's important to understand. Why did price turn up here after all of this? This did not happen because of any speech or indicator or fib number or anything else. Price moved higher here because there were more buyers than sellers. There was more buying pressure than selling pressure. Now, could a speech, could a tweet, could an indicator, could a fib affect so many people, so many traders, that their mindset goes from bearish to bullish? Then yes, absolutely. But it's important that you understand the difference, okay? No indicator moves the market, no oscillator, no fib, no nothing. The only thing that moves the needle is buyers and sellers. These fine folks right here. Now this could be you in your extra bedroom. It could be Goldman Sachs. It's the beauty of a purely electronic market. Everyone gets treated equally. Now down on the floor, when the trading floor was still in bloom, not so much the case. A lot of success for traders on the floor was, half those guys didn't even know how to trade. Or they knew how to trade the way they were taught, right? You got a buddy that stands on the other side of the pit. You get an order that comes in to buy X number of contracts of whatever. And then you got a buddy over there and all of a sudden he gets a sell order. And so you guys match it up so that you can both make a little something off of it and the deal's done. There's none of that here. Now, when the exchange floors first closed in Chicago, we had an influx of people who were traders who stood in the pit, now faced with a completely different way of trading, looking at just these charts. No roar of the crowd, nobody on the other side of the pit, just you and price. Some successfully made the transition. Sadly, some didn't. Some went on to sell real estate or cars, or they had to find a new career midlife. It was very traumatic. If you've never seen the movie, I think there's two. One's called Floored, and I think the other one's called The Pit. I could be wrong. But anyway, they're both worth watching. It's a little sad. It was the end of an era kind of thing. But it might help you put things in context between what they did. The idea that you may have always held in your mind of what a trader is was based upon what took place in the pits. And the definition of what a trader is today, just looking at these screens. Big, big, big difference. All right. So these folks, be it you in your spare bedroom or Goldman Sachs, this is what moves price. If enough people see a 50% pullback on the S&P Emini on a daily chart, because that's such a popular thing, you can bet that the market is going to react. But it's going to react because so many people saw it and chose to take action, not because of the 50% fib. And I hope I'm getting this across. People seeing that were moved to take action. It was the people taking action that moved the price. Okay. All right. So when price could not go any lower, it's always going to do the same thing. Support, once found, will send price in search of resistance. Once found, will send price in search of support, which will send it back to resistance, which will send it back to support. This support here, it's this same area across here, but this pullback is important because we connect with what I call blue and climbing. The technical term of this indicator is the CFMA1, which is a mouthful, and it doesn't really explain what it does, but we had to name it something. Red and falling represents bearish sentiment. Blue and climbing, on the other hand, represents bullish sentiment. And for those of you who may have always wondered about the whole bull-bear thing, like what does that even mean? It's real simple. If a bull were to attack you, he's going to lower his head first, and then he's going to come up and attempt to gore you with his horns. So it's an up move that inflicts the damage. A bear, on the other hand, he will first rear up on his hind legs, but then the kill shot is when he comes down, a down move, and he attacks you and rips you to shred with his claws on the way down. So bull up, bear down. Okay? Now, we got to resistance, got sent back to support. This support is important because it connected with blue and climbing. So as opposed to just having structural support, we actually have one of our indicators, and we're very indicator light. In fact, what you see on my chart is everything. That's it. Right there. Down here, that's just volume. Down here, that's just the average true range. And currently, the average true range of a daily candle on the S&P is 96 points. Let me see what my look back period is. The default look back period is 14. I've got it set on 100, so it's looking over the past 100 days. If I put it on the default 14, let's see if it changes that number of 96. It does. Drops it to 60. Okay. There's roughly 20 trading days in a month, give or take. Okay. So looking over the last 20 days, the average true range, which is the low of the session to the high of the session, 63 points. That's a lot. When I first started trading Emini Futures back in 2005, the average true range for the day, and for many years after that, was about 20 points. So we're running about 3 times what history shows us is the average true range. But because this is the new reality, this is what we have to embrace and deal with. Okay? So price got above, and so the ATR, that's built into every platform. Almost every platform, whatever platform you're on, it's got an ATR indicator. Now, volume, okay, when I hover over it, it tells me, well, it says right there, 934,000 contracts have been traded so far. Yesterday, we traded one and a quarter million. Back on Friday, we traded 2.2 million. Okay? So those are just built into your platform. This slingshot here, when it's above this 50-yard line, and if your 50-yard line is multicolored, red and green, you can change it by just double clicking, bringing up the property box, and going up here to where it says bias long color, bias short color, because those colors don't have any meaning. It's a holdover from a previous thing we were working on. You can just change them to white like I've done. And blue and climbing is bullish. Being above the 50-yard line makes it really bullish. Red and falling is bearish, but red and falling below the 50-yard line makes it really bearish. Okay? Everything we do, everything I will say to you in regards to this daily chart, I would say the exact same thing if we were looking at a 1-minute chart, or a volume chart, or a range chart. Everything we do is fluid across all markets and all time frames. Once we closed above the BBC, the green line, bull bear cross. Below it we're bearish, above it we're bullish for whatever time frame, even on a 1-minute chart. Okay. Obviously this doesn't change quite as often as a 1-minute chart changes. When you learn to use multiple time frames, you'll be integrating the lower time frame with the higher time frame. The higher time frame gives you the picture, the trading opportunity. The smaller time frame helps you time your entry. Okay, but we'll save that for another day. All right, so we close above the BBC. So now instead of looking for lower prices, we're looking for higher prices. So we get a leg and a retracement back to the BBC. Price always reverts to the mean. In our case, the mean just happens to be green. So we get a leg and a retracement, a leg and a retracement, a leg and a retracement, a leg, and this is a shallow pullback because we don't come all the way back to the BBC. We just get to blue and climbing, and we're 1, 2, 3, 4, 5, 6. We had 7 back-to-back sessions in the S&P 500 Emini Futures where we've printed a green candle. I'm pretty sure you know that can't go on forever. Okay, at some point price will revert to the mean, pull back to the BBC. Now, you will notice how small these candles are compared to a lot of these candles, right? That can be sort of a clue as the range on the day starts to diminish, okay? You'll get smaller candles. That can indicate a potential turning point, okay? Now, the next area of resistance that's already highlighted, just as all of these were pre-highlighted, because market structure allows you to do that. And that's what we teach you. We teach you how to read the structure of the market so that you're able to know what the next high probability move is. We can't teach you how to tell the future because God didn't give man that ability. It's in Genesis. God created Adam. He put lots of stuff in him, but he did not give him the ability to change the past or to know the future. And those two things are inextricably linked for eternity. Now, there are many websites out there that you can go to. You may have even gotten an email from one of them this morning inferring that they have cracked the code, that they can read tomorrow's headline today. Well, I'm here to tell you that's not true. I've not yet met a man smarter than God. Okay? And so the world in which we live, based on God's law, based on the laws of physics, you cannot know the future. You can guess, and you can be right half the time. Maybe you're lucky. Maybe you're right more than half the time when you guess. But guessing and knowing are two different things. While we can't know the future, we can know with great certainty what the next high probability move is. And that's evidenced in everything that we do across all markets and all time frames. Let's go look at the alerts. I posted an alert last night. Let me see if I can find it real quick. Nothing earth-shattering, but I was attempting to make a point, as I do from time to time. Where'd that thing go? All right, let me find it somewhere else. All right, now I'm just mad. Okay. Over the last 96 weeks, we have issued, and I wrote this yesterday afternoon at about 4 p.m. Eastern my time. The numbers have changed. We've issued 3,906 as of 4 p.m. yesterday afternoon Pacific. We've issued 3,906 Logic 247 alerts. Out of those 3,906 alerts, 781 were stopped out. As I always tell you, about 20%. Now, did I bring that up so I could brag or boast or any of that? No. To make a point. If you're going to become a consistently profitable trader, you must have a definable edge. Whether it's ours or someone else's, you must have a definable edge. Now, what's a definable edge? Well, it's the probability of one thing happening over another thing under a specific set of conditions. So anytime you look at a methodology, a strategy, or some kind of indicators, that should be the first question that you ask is, does this give me a definable edge? In other words, if I follow this thing, is it going to create profitable results more often than it creates unprofitable results? So the numbers again over the last 96 weeks, as of 4 p.m. Pacific yesterday, 3,906 alerts, 781 stopped out. And all the alerts, anybody that takes the trial, we're very transparent. All of that information is available to you. You can look through it, comb through it, you can chart it, you can ask questions about it. above and beyond, we strive to be incredibly transparent in everything that we do, because our goal is not to keep you hooked on us for life. Our goal is to teach you to see the markets the way that we see them, to think the way we think, which will lead to you taking the same action that we would take in any situation under a given set of conditions. You'll notice there's no new indicator, no super indicator, no great discovery every other week designed to milk you out of more money, more money, more money. We got one product. Okay? We do one thing. By the grace of God, I think we do it pretty good. We teach you how to do what we do. And once you learn how to do what we do, we don't have anything else to sell you. If you're a partner, you can upgrade to a passport, but beyond that, the passport gives a trader everything you need, one low price, under one roof, with literally around-the-clock support. Telegram channel is open for business Sunday night at 6 p.m. Eastern, and it stays open until Friday afternoon at 5 p.m. Eastern. I'm sure at some point in your trading career that, you may have bought some indicators or some kind of a strategy off the internet, and you started to try to use it and you got lost, so you sent an email to the creator or to the Zen help desk, right? And you waited and waited and waited, and maybe you get a response and maybe you don't. Maybe it comes in 3 hours, maybe in 3 days, maybe 3 weeks because he was on vacation. We don't stand behind everything we do. We stand beside it. We stand with it, around the clock. And our guarantee to you is this: if you become a CFRN passport holder, if you ever, and I mean ever, find any methodology or strategy available to the public that outperforms the CFRN Emini method over the past decade, we'll buy it for you. I'll even pick up a copy for myself. My goodness, who wouldn't? All right, so we're coming up on resistance. We're printing a doji. What's going to happen next? Now, it's not really a doji when we blow it up. Not a doji at all. Okay, so we've taken out this swing high, but we're off the highs of the day. Swing high today, 3075 half. Okay, we got a weekly zone at 3076/3077. Weekly trading zones go out to members Monday morning, 6:15 a.m. Eastern. We've been publishing the zones since December 14th of 2009, over a decade. And prices have behaved in the same manner since day one. And I can vouch for every week since December 14th of 2009 because we've charted it and shared it here with everyone, both on the show and with our members. Bill typed Fed. What's going on with the Fed, Bill? Okay, I'll wait for you to respond. So we're talking about resistance. Support and resistance is an area. Yes, I could hover over this candle and I could say that the swing high was 31.31. But it would be short-sighted of me to just say, okay, 31.31 is resistance. Because when the market tried to get up to 31.31 again, it only made it up to 31.21 and a half, right? So think about it for a minute. Okay, this candle opened, this daily candle, and it was green. It pushed all the way up here. And then it pulled back and it pulled back, and then once it pulled all the way back to the opening price of that day, that session, and traded below it, suddenly what was a beautiful green candle became a mighty big red candle. So we know we have sellers here, but apparently we also have sellers here. And when the next session opened right here, you see that little tiny wick on top of that daily candle? In fact, let me hover over it. Okay, we opened at 3102.75. We put in a high at 3106. So there was actually a little humble green up there for a moment before the thing tanked. Now it traded as low as 29.87. We closed off the low of the day, and then the next session just picked up the ball and continued down. So that's why I want you to understand this is an area, okay? And our daily chart, that's a big area. I mean, we're talking 30.90 up to 31.23. That's about a 30-point area. Well, how's that any good? Well, this is where multiple time frames come in. As you approach resistance on your daily chart, then you'll use your intraday chart, your smaller time frame, to navigate to know whether you should be long or short the market. Okay, so let's jump from here. So we know we are approaching resistance. Do we still have a little more to go on the upside based on the daily chart? It appears that way. Okay, but we're off the high of the day, and so today we printed 30.75.50. That's the highest price we've printed since the pandemic low, and we're now into the pandemic recovery. Although you don't hear much about the pandemic anymore. Oh, Bill's comment was that the Fed was doing all that buying, the majority. Well, Bill, do you think they're in the market buying futures contracts? Do you think they're buying stocks? Are they going to the Treasury auction? I'm always curious because different people have different interpretations of what that means. So I'd be happy to hear your thoughts on that. All right, let's go to the 30-minute. Bullish cross, price pulled away, price pulled back to the BBC. What do we expect to happen? Exactly what happened. And then what do we expect to happen? Exactly what happened. When price runs into red and falling, it tends to behave as resistance. Bullish cross. Now this is now some people sometimes will go, you know, I've been following Michael in the morning. I want to learn your method. It's the same. This is what Michael teaches you in the morning on the range chart. Bullish cross, price pulls away, price pulls back to the BBC. On this chart, it holds more often than it doesn't. And so what do we expect? We expect to move higher until we run into an obstacle. The first obstacle we hit stopped us dead in our tracks, red and falling. Sent us back to the BBC, which we expect to be good support. There was more selling pressure than buying pressure, and so we spiked below it. Now, right here where this bullish cross took place, 30.45. If price gets there, and it looks like it might, you should expect that to be good support. The swing low so far is 30.47.75. Okay, what you're seeing here is a reaction to here. Okay, but I don't want to get too caught up in that. I don't want to throw too much at you at one time. Okay, all right. So we get a bullish cross, we get a leg, we get a retracement, we get a leg, we get slapped down. Price is now, or it was below the BBC. Now it's slightly above. Okay, so what's price going to do? Price is either going to try to take out the swing high at 62 and a quarter and make a run at this swing high, or it's going to get below red and falling, or it's going to join red and falling, and it's going to attempt to take out this swing low. Now, at the right scale, everything looks simple. That's from that book I'm reading about ground zero. If you didn't download it, I put a link in the Breeze channel over the weekend. Old friend of mine, he and some German physicists have written a book called The Ground Zero Model. You may or may not agree about something about 9/11 that didn't quite pass the sniff test. So I haven't finished the book. I haven't arrived at the final conclusion. But it's pretty fascinating. Okay, so if you're into that kind of stuff, check it out. It's in the Breeze channel. So from here, one of two things will happen. Price is going to run up. Its mission is to take out this high, take out this high, get to the zone. From the moment the markets open Sunday night at 6 p.m. Eastern, till they close Friday afternoon at 5 p.m. Eastern, price is on a mission. It's trying to take out swing highs or swing lows. And as a CFRN passport holder, here's how you see it. When price got above the BBC right here, it's saying, hey, I'm going to go try hit the zone overhead. Over here, when it got below the BBC, it says, hey, I'm going to go try to get to the zone below. Does it always complete the journey in one trip? No. So do we have an opportunity here? Price is above the BBC. We're printing a green candle. So on a smaller time frame is where you would go to look to time an entry to be long. Yeah, but don't I have to wait for this to pull away and then to pull back? And you can. Or you can go to your smaller time frame. Now this is all stuff that I teach you in the one-on-one mentoring sessions. Okay. This is how markets work. I used this at a mentoring session yesterday. Leg, retrace, leg, retrace, leg, retrace, leg. That's an uptrend. But what happens if you go leg, retrace, leg, and then this retracement, instead of becoming another leg to the upside, what if it just keeps going? Now you're printing legs to the downside. Leg, retrace, leg, retrace, leg, retrace, and if it doesn't give you another leg to the downside, then you're going to start building legs to the upside. So learning how to look at a chart and know where you are in this grand scheme of how markets work is very important. We do not want to be long here. We don't want to be long here. We don't even want to be long here. We want to be long and take our profit right there. If you've invested your time and treasure in a methodology that attempts to pick, tops and bottoms, that's a very challenging way to trade. Because you don't know it's a top or bottom till after the fact, quite frankly. So, as opposed to picking tops or bottoms, right? We're just looking to scoop a little bit out of the middle. Grab our goal for the day and go on our way. Grab your goal, cash the check, come back tomorrow. Grab your goal, cash your check, come back tomorrow. Grab your goal, cash your check, come back tomorrow. All right. You see what we're doing? In fact, yes, I'm typing. I'm not ignoring you. All right, so when we consider being long, 3065 or 3067. 3065, target 3067, weekly trading zone 3076/3077, and the alert is in the win. Okay, now one or two things will happen. It'll trigger and do what the alert says, or it won't. If it doesn't, that does not define who you are as a trader. It doesn't define whether or not you really have a definable edge, because it's just one trade. You've got to have a larger sample size to determine if anything you're doing has any meaning. Okay? All right. Let me give you the alerts from last night. First, let me give you a recap. Valerie was just kind enough to send over to me. We're having one of our worst weeks in a horribly long time. I sound pretty rattled too, right? But I'm not. I'm not rattled. All right. Yesterday at this time, what was this? Was this Friday? Yeah. On Friday, this is where we stood. We had 2 stop outs the whole week. I think that changed by the end of the day. And then yesterday at this time, we had only issued 13 alerts. We were waiting on the results of 3. That gave us 10 actionable alerts. Out of the 10, 4 got stopped out. More than like the previous week. 40%. But as I tell you every day, the average, the number that you should look to with Logic 247 is 20% of actionable alerts being stopped out. Now we've doubled the number of total alerts. 6 haven't triggered. Still waiting on the results of 5. So we've got 15 actionable alerts so far in Logic. Now that doesn't include the Concierge. We'll go over the Concierge alerts in a moment. 5 have been stopped out. So we're at 33% of actionable alerts stopped out. This is after weeks of having 3%, 4%, 5%, 6% stopped out. And I'm always careful to tell you that it's just like those weight loss ads with the before and after picture. These are not typical results. When I show you a recap that shows 20% stopped out, that's typical. On all those weeks that we've gone through since this pandemic thing started, we've had incredibly low numbers being stopped out. But I'm always conscious to tell you that that is not the average. Okay, so see, we've got a large sample size, 96 weeks, 3,000. That alert I just put out was alert number 3,920. It's a lot of alerts. It's a lot of weeks. It is a sufficient sample size for anyone who knows anything about trading to mine that data, because again, as a passport holder, you have access to all the data. Everything we've done since day one. Got it all. You can stratify it, classify it, just don't staple or mutilate it, please, because we love our data. See, this isn't about you just mirroring someone else's trades and being able to print business cards and tell people, yeah, I trade for a living. No. There's nothing wrong with that. If that's what you want to do, then my gosh, you should do that, because life's short. Our goal here is to teach you to become a trader, to arm you with the knowledge and the tools to sit down, look at a chart, and do exactly what I just did. Bullish cross, price pulled away, price pulled back. I want to be long, up to the obstacle. But see here, we're above the obstacle. The obstacle's below us now, right? So we got clear skies overhead up until here. Does that automatically, magically mean that price is going to just fly up there? No. Price could stop anywhere along the path and reverse hard. That's why you always have a hard stop, to take care of yourself when that happens. If price can get through this obstacle, well, the next obstacle just pretty much melds into, and that is this week's weekly trading zone overhead, 3076/77. Okay, last night's Concierge Trade Alerts. If you would like a screenshot, I was in a mentoring session yesterday with someone and they still weren't quite sure how to do a screenshot. So let me show you again. If you're using a Windows computer, the bottom left hand corner of your monitor, it says type here to search. If you go there, bottom left hand corner of your computer screen where it says type here to search, just type in the word SNIP, S-N-I-P, and then hit enter. It will open this app. Whenever I reboot my charts, I don't ever close this app. I don't ever hit the X. I just hit the little minus and it shrinks it down to my toolbar. So it's always there waiting when I need it. Okay? So, new. See how I grayed out the screen? You can move this out of your way. Hold down get your cursor in the right position, and then hold down the left mouse button. Drag it down and to the right. Release left mouse button. Now you have an image of that, which is very handy. Like if you want to share a chart with me, if you want to send me a chart in Telegram and go, hey, am I seeing what I think I'm seeing? And then I can respond back, or Michael or Valerie or even one of the other traders. Our traders love to help one another, and they do it all day, every day in the discussion group. Now, a lot of places don't let you talk to the other members. We encourage it. We're proud of the relationships that we've built and that our traders have built with each other. Michael and I envisioned this, seems like forever ago, when the only places to go on the internet were like just these filthy chat rooms and message boards where everybody was, calling everybody else names and using profanity. And, we said, if we ever get this, let's make a nice place. A place you could take your kids. By the grace of God, we did. But we couldn't have done it without all of you. You guys are what make it work. And I thank you. All right, so now that you've got this handy dandy image, what are you going to do with it? Okay, you can right click it and it'll give you an option to send it to someone as an email, or you can copy it to the clipboard. And if you don't, I'm trying to think of how to explain copy to the clipboard to someone that doesn't understand that concept. It holds it in memory. It holds it in its mind's eye. So if I click copy, now I can go to my Telegram app and I can put my cursor right down here where it says broadcast a message. I can go Control V, or I can put my cursor down here and I can right click, paste, and it's asks me, do I want to add a caption? Like maybe I want to say ES 30-minute chart. Send. Boom, there it is. Around the world in a flash. Okay. All right. So, back to the program. Last night's alert. I'm assuming in all that you had a chance to get the 5, 4, 3, 2, 1. Okay. All right, for the S&P, we want it to be long 3063. 3063. Important prices, important areas are almost always tested. What does that mean in English, Dwayne? It means that if a concierge trade alert or a logic alert triggers once, there's a high probability it'll trigger again and again. Sometimes we see 3, 4, 5, 6, 8 triggers off one alert in one session. Now, if you catch, one of those triggers and it runs to the target and you get your goal for the day, then you're not really concerned how many other times it triggers, right? Because you came to get your goal, cash your check, put the mouse away. I only know two people that trade bell to bell. One's gone and the other I don't believe. So, there you go. Which business model do you want to follow? Where you get your goal and stop, or you're always in. Oh yeah, I know another guy, he's always in. Yeah, anyway. All right, back to the show. Okay, so the alert said last night by 3063. We know we got a weekly trading zone overhead at 3076. On a long alert buy, the final trade to target is always the zone overhead. Does it always make it there? No. But if it even makes it halfway, that's usually a pretty nice move. On a short trade, the final trade to target is always the zone below. Okay. See, these weekly trading zones, as early as Monday morning, you've got a beautiful framework for whatever markets you trade that I do zones for. You know with a high degree of probability, if price gets up into this area where it's going to find resistance, where it's going to find support, that's very valuable information. Anybody that tells you, oh, in the world of algos and quants and high frequency trading today, support and resistance, it's like horse and buggy, you can't expect to trade like that. Don't fall for that. Don't fall for that. Price, as I showed you before. Price rises until it can't go any further, resistance, and then it falls as far as it can fall until it finds support. And support sends it back to resistance, and resistance sends it back to support, and it's a never-ending cycle. It's been going on since the first day any market ever opened, and will continue unless they change how markets work. And I don't foresee that happening, because it's kind of like gravity, it just is. Okay, so from 3063 to 3076, that's 13 S&P points. Alexa, 13 times 50.
13 times 50 is 650.
Okay, that's a $650 per contract move. Now, important prices in important areas are almost always tested. So we have another trigger here, but over here we're on the back of blue and climbing, and we know what our final trade to target is. Okay, different scenario here. We've pulled back to the BVC, that's awesome. We start printing a green candle, really awesome. We trigger in at 3063, awesome. But we know that as we approach red and falling, most likely it's going to be resistance. So we'll call it 3068. So from 63 to 68, that's 5 points at $50 a point, $250 per contract traded. Now, once you've earned the right to trade multiple contracts, let's say you've earned the right to trade 10. A $250 move is a $2,500 move. When I say earn the right to trade multiple contracts, I don't mean that you ran a successful insurance firm, earned a bunch of money, and now you want to learn how to trade. So, oh, I got enough money to trade 10 contracts. It's not about how much money you have. It's about how profitable in the markets you are. If you come on board with us, we want you to put together 10 consecutive days in a row in the simulator or the demo account, however you refer to it. 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, the blueprint will give you the green light to go along with one contract. Now the goal is to increase your account balance by $2,000 Then you'll get a green light to add a second contract. That second contract's a big deal. Not only does it double your earnings, but you're adding it with profit you earned in the market. The blueprint will tell you when it's time to add number 3. And again, you'll add number 3 with profit you earned in the market. If you don't have profit that you earn in the market, then you shouldn't be adding another contract. You should be booking a mentoring session so that we can, find out why. This is a learning process. This is a journey. There's no just flipping a switch. Okay, I fired these guys off a check for $5,000, so now I'm a trader. Just plug and play. There is no such thing. People will try to fool you into believing there is such a thing, but there isn't. You don't wake up one day and say, "Yeah, I think I'm going to run a marathon today." First, you try walking to the mailbox, briskly, and then you try walking around the block, right? And then maybe you jog up and down the stairs a few times. You work your way up one step at a time. Think of yourself as a financial athlete. You're fine-tuning your ability, your skill set. And the incredible thing about this set of life skills that you can learn with us is they'll be with you for life. These markets, they're far bigger than you and I, right? They're institutional in nature, in that if you don't feel good today and decide not to get out of bed, market's getting up. Market's going to work. Market's going to do what markets do. Okay? So once you have this skill set, all you need to be able to trade is to be in the right frame of mind, to have a reasonably modern computer, and a fast, dependable, reliable internet connection. You can trade from the coffee shop of the hotel you're staying at in Singapore, your bedroom, your office downtown, the back of a city bus, as long as you have the right frame of mind, a modern computer, and a fast, robust, reliable internet connection. And I'll just throw this in as a freebie. Wi-Fi is great, but if possible, run a cable to your router, a piece of Cat 5. Because Wi-Fi can be finicky. Sometimes it can fade in and fade out. You got 20 contracts on, and price is flirting with your target or your stop loss. Yeah, you don't want your Wi-Fi to take a dive on you, right? So if you're in that bed, or you're in the hotel room in Singapore, right? There's probably a port where you can plug that Cat 5 cable in, so that you're hardwired to the internet as opposed to Wi-Fi. That's just a freebie. Okay, so we went up 13 points, we went up 5 points, and now we went up to 66.5. Okay, so 3.5 points. That's what's happened so far with this move. S&P 500 Emini Futures. Last night's signal to be short, should that be necessary, 30.32, never touched. Okay. There you go, 30.32. Any questions on this? Last night at 7:10 p.m. Eastern, I alerted every one of our traders around the globe, and those on a free trial, that if price hit 30.63, they should consider being along up to 30.76. Is it always that picture perfect? Well, you be the judge. I'll just say no. Every recap I've done for the last 5 years, I think it's about 5 years now, is archived at youtube.com/CFRN. So you can go there and watch yesterday's show if you missed it. But if you want to find out if I'm, really telling you the truth, go back a week, go back a month, go back a year, go back 2 years. Open up a radio show, fast forward to the point where I'm doing the recap, just like I'm doing right now, and find out. I'll tell you what you'll find, but I want you to find it yourself. You'll hear the same words, the same philosophy, the same methodology, the same corny jokes. Am I in a rut or am I in the groove? Again, you decide. All right, let's shove on to the Dow. Okay. Last night on the Dow, the alert was to be long 25535. $255.35. And as mentioned earlier, important prices, important areas are almost always tested. Now, if you're watching the show for the first time today, you're probably going, oh yeah, right. Okay, so this guy caught a couple lucky breaks today. Okay. Don't do me any favors, but do yourself the favor of picking a show at random, a week ago, a month ago, a year ago, and see if the same thing doesn't happen on that show. If it doesn't, I'll let you eat your hat right here on public radio. Okay? All right. So from 25535, that was the alert price. Right there. We put in a swing high at 656, so I'll call it 655 because I think I can do that in my head. Oh, I can't. Well, I could, but I got a dollar store calculator here. Let's see. So what did I say the high was? 25655. 25655 minus 25535. 120 points. 120 points times $5 a point is $600 per contract traded. That's if the blueprint still has you on one contract. This move. Now, let me point out that we didn't make this move happen. Our indicators, our methodology, our strategy, we're like the usher in the theaters of days gone by. You went to the movie theater, the movie's already started. There's a guy with a little pillbox hat and a flashlight. He would escort you into the darkened theater and shine the light on the floor so as to not distract the other folks watching the movie. And he would help you get to a seat safely without, tripping over somebody's feet or your own. We're that guy. I'm gonna get one of those hats. We're that guy. We're shining the flashlight. We didn't produce the movie. We didn't write the script or hire the actors. We didn't even make the popcorn. We're just the guy with the light, trying to help you not fall over your own feet or someone else's. Okay? All right. So we get back below the trigger. And when you dip below the trigger and hit the BBC at the same time, man, that's sweet. Because, number one, we expect multiple triggers. And when price pulls back to the BBC, we expect it to hold. Why? Because it holds more often than it doesn't. Boom. So we put in a swing high up at 684. So 684 minus 535. It's 149 points times $5 a point is $745 per contract traded. Now again, somebody just seeing this for the first time might go, man, that's awesome. I want to subscribe because I want to trade those alerts and make some money. Okay, well, there's nothing wrong with that. But but play the tape all the way through. Wouldn't you much rather? I mean, you can do this, you can do that at the same time, right? But just think about, while you're trading the alerts, right, you're also learning how to spot this and understand this and this. Isn't that better? Isn't it? Isn't that what you really want? At the end of the day, isn't it what you really want? Is to learn how to trade, to not be dependent upon any tip sheet, guru, just you in the market, right? And a couple of humble indicators. And a methodology and strategy that has stood the test of time, and just one aspect of it has a sample size of 96 weeks. 3,000 and whatever it was I said, individual trade setups. I don't know if there's anybody on the internet with any methodology to sell that could show you a sample size that contains 3,000 something individual alerts that were published live in real time before they happened, not after the fact. You know, anybody can look like a genius with a historic chart. Think about what I just said. You've been to these seminars, these webinars, you watch these videos on YouTube. Anybody can look like a genius with a historic chart. Also, it's very simple with some platforms to run the market replay kind of in stealth mode, right? You can really look smart there, and nobody knows but you and God, and he's not happy. Okay, price gets back below the trigger again, bounces off the BBC. Now in this case right here, now I said it ran up $745 per contract traded, but when this thing approached red and falling, you either took your profit or you were trailing behind it just so close, knowing it'll probably come back a couple ticks, take you out. But every now and then, the market at a trouble point like this, instead of stumbling, it'll actually get a burst of energy, which I think may have happened here. So you could have been trailing really tight, and you got a gift. I call that locking the back door, leaving the front door open. Every now and then, good things actually do happen to good people. So we're back below the trigger. We're running it red and falling again. So yes, we made it all the way to here, but you have to expect this to be the end of the road. If it goes further, if it gives you more, awesome. But if all it gives you is 596, 596 minus 535, that's 61 points at $5 a point. It's $305 per contract traded. All right, on to the Russell. Last night's alert on the Russell, consider being along 1411. Come on, Captain. 1411. 1411. Okay, buy 1411. Okay, so getting along at 1411 took you to a swing high at 1421. That's 10 points at $50 a point. $500 per contract traded. Okay. Now, are you noticing a trend here with the S&P, the Dow, and the Russell? They all basically did the same thing. If you were in the room this morning, when I did, I've been opening the room early and sort of doing a, pre-session strategy, a strategy session with our passport holders, members. And I went through the daily of the S&P, the Dow, the Russell. They if you had taken away the name, you might have been hard, and the prices, you might have been hard pressed to say which was which. They look that much alike. Now, we know that the indices don't move in lockstep together intraday all the way. But at the right scale, everything looks simple. And so I hope it impressed upon you this morning, at the right scale, which happened to be the daily chart, when I showed you the S&P, the Dow, and the Russell, even the NQ mirrored the action, but we could easily see how the NQ had been more aggressive to the upside. And you can do this yourself. Just wherever you are, after the show, bring up a daily S&P chart, then turn it into a Dow chart, then turn it into a Russell chart. You'll go, what the heck? And then change it to the NQ. NQ did the exact same thing. It was just more aggressive to the upside. The 4 indices. Now, this is why it's a little bit troubling for me when I see one of the indices that's not keeping up with the other 3. Because I have to ask myself, okay, do the 3 have it right and the 1 got it wrong? Or is that 1 picking up the true rhythm of the market and actually leading the pack to the upside or the downside? Well, that's a question we'll answer another day. Okay, so we get back below the trigger, 1411, and if we just traded it up to red and falling, it's about 9 points, $50 a point, $450 per contract traded. Now, this one gets a little tougher, okay? Trigger's still 1411, but the high of this candle and red and falling is about 1416. So you still had about 5 points of room to run and 5 points at $50 a point. It's $250 per contract traded. Okay. All right. NQ. Now, here's the NQ doing the opposite of what the others are doing. I just showed you the S&P, the Dow, the Russell, all making their moves to the upside, all triggering on the long side. Now, the NQ was playing along last night. It was this morning that it changed its mind and wanted to go rogue on us. The alert last night for the NQ was to be long 96.13. Okay, from 96.13 up to 96.70. Okay, if it was 96.20, it'd be 50, so that's 57 points times $20 a point. So $1,140 per contract traded. Okay. Now, you get back below the trigger, and this is a completely different picture, right? As you go to trigger here for another run, you've got the BBC overhead. Wah, wah. See, when you approach the BBC from below, that represents potential resistance. So you don't mess with that one. Now, if we trigger again over here, you can mess with that one if you choose to, because you're going to be getting a... Now, let me just show you. See this bearish cross right here? Right there? Okay? That is an obstacle that the market must overcome. If it can overcome that obstacle and then trigger, okay, then you've got a potential another move to the upside. The short alert last night for the NQ was 95.31, which was right down here somewhere. 95.31. Okay, 95.31 took us down to 95.05. We'll call it 25 points. $20 a point, $500 per contract traded. Let's go to crude. Now, I've got zones here from this week and zones here from last week. 3650/55 this week. 3590/95 last week. This is why I always tell you, hang on to last week's zones. Because in the early part of the week, they will still provide you with, well, I mean, I don't guess I even have to say anything. We hit the zone, this week's zone. We pull back to the BBC, which also happened to be right at last week's zone. Caught another leg. Okay. So last night's alert for crude was to consider being along 3560, which was down here. And you're saying, that didn't just happen. Well, it did. Important prices, important areas are almost always tested. Almost always. Not every time. Almost always. I mean, in this context, it just almost seems weird. I mean, you pull back to the BBC, you expect it to be good support, right? You pull back to a weekly trading zone, you expect it to be good support, right? But yet there's this compulsive behavior type thing. It just had to stick its hand down there and just get below that trigger. Just a wee bit. So you could do it all again. Okay? So from 3560 to 3650, that's $900 per contract traded. For the 10 contract trader, it's $9,000. Do not trade live until you become consistently profitable in SEM or demo 10 consecutive days in a row minimum. And then you go live with just one. And after the one, you never add more contracts unless you're adding them one at a time with profit you earned in the market. Okay? That will go a long way in helping you stay safe and liquid. All right. So price gets back below the trigger and runs up another $900 per contract. What's it doing now? Well, when price approaches the weekly trading zone from below, we expect it to be good resistance. It was. As price pulls back, is it going to pull back to the BBC? Well, price always reverts to the mean, but sometimes you'll get a shallow pullback. Maybe it only pulls back to the step line. Maybe it pulls back to blue and climbing. Maybe it pulls all the way back to the BBC. I don't put out alerts on the counter trend moves. Why? Counter trend trading is a totally legitimate way of trading. Some people specialize in counter trend trades. We don't. We specialize in trades that follow the prevailing trend as defined on a 30-minute chart. We found over 96 weeks that those have a higher probability of ending up positive compared to a counter trend trade. I will often mention counter trend opportunities in the discussion group. I used to even put charts in the discussion, but I stopped because everybody wanted to go trade them. And that's not my intent. Because I started, hearing people like, oh man, I took that counter trend. So I just said, you know what, guys, for everybody's benefit, for the safety of the group, let me just stop even pointing them out. Sometimes they look really juicy, right? And here I am about to point this one out. I'm not going to do it. I'm just going to walk away. Gold. Last night's alert on gold. Consider being short, 1746. So that happened. Right there. 1746. So this first dip only took you down to 44. That's $200 per contract traded. Then we got back above the trigger, triggered again, This time we went from 46 to 28. 46 minus 28. That's $1,800 per contract. From there to there. And those of you that were in the strategy session this morning, remember I told you that this number right here would most likely be good support. Okay. And so what's it doing? It's resistance that can't be broken goes in, support that can't be broken goes in search of resistance. Could find it at red and falling, could find it at the zone, could find it at the BBC. Just have to be patient and find out. Okay. All right. So S&P, bueno. Dow, bueno. Russell, bueno. NQ, a little tricky, but bueno, bueno. Crude oil, bueno. Gold. Okay. I live just north of the border, I can say that. Okay. Now, I already gave you the recap for the logic, but I'll scroll you through it so you can say you saw it. Of course, every passport holder has access to every alert we've ever issued. Last week, we had a total of 70 alerts. 15 never triggered. 55 were actionable. 4 were stopped out. Not typical. 7%. This week, week 96. Coming out of the gate, 2 stop outs back to back. Now, Valerie does such a good job at this. Thank you, Valerie. See, the second time this alert triggered, it ran to the final target. Okay? But we don't count that because it's just too complicated keeping track of the multiple triggers. We recap the first one, and if it stopped out, then we just call it what it is, right? She's just putting in a note here that, you know, for anyone that picked up the second trigger, that it did actually run to the target. Okay, but we still count it as a stop out. Here's the Russell. The first 3 out of 4 this week, after having a week last night where out of all those alerts, we only had 4 stop out. Sunday night, 1, 2, 3 out of the first 4. That's the truth about trading. That's why, you know, I've got a good friend. I watched him work on like an indicator thing, set up, whatever, strategy for years. Then he traded it and got stopped out once. He made 1 trade, got stopped out, and said, I'm going back to the drawing board. And I freaked out. Don't do that to yourself. No one trade makes you a hero or a zero. You need a large enough sample size because this is a business based on probabilities. It's simply the probability of one thing happening over another thing under a given set of conditions. Hey, a thumbs up finally. Crude, gold. No trigger. Another stop out. Man, that's brutal. Dow, Russell, another stop out. S&P, NQ. No trigger, no trigger, no trigger, no trigger. Crude, gold, ES. And then stuff I've put out today so far. There's a gold. There's an S&P. That's the deal, Neil. Good word for the day. Guess John's not going to make it this fine day. Okay? And that's okay. I hope he's doing well. I hope he's fine. I hope he's healthy, happy, and wise. What's going on? Stand by one moment, please. And I'm back. Okay. Today, Galatians 5:13. For you, brethren, have been called to liberty. Only do not use liberty as an opportunity for the flesh, but through love, serve one another. Before Jesus went to the cross, the Bible says he got up from the meal, took off his outer clothing, and wrapped a towel around his waist. After that, he poured water into a basin and began to wash his disciples' feet, drying them with the towel that was wrapped around him. That's John 13, 3 through 5. Then Jesus said, I have set you an example that you should do as I have done for you. Now that you know these things, you'll be blessed if you do them. There are churches today that hold what they call feet washing services. Back in the day, back in Jesus' day, they didn't have Adidas or Converse or Nikes. They had sandals. So if you went to the store or went to get the mail, your feet would get very dirty. When you came home, if you had servants, they would come with a basin of water and they would wash the master's feet. Jesus, who came as the Messiah, as the King, he freaked the disciples out by washing their feet. Just as some of my amigos in Africa, they'd never seen a white man kneel down and wash a black man's feet before. It was moving, to say the least. It's about an attitude of the heart, about being a servant. It goes beyond color. It goes beyond anything. There's one race, folks, the human race. But in this example, Jesus put himself in the role of a servant to his disciples, the ones he had come to teach. And he wasn't teaching them that you should always keep your feet clean. He was teaching them to have his heart, the heart of a servant. Love cannot manifest in isolation. It can't be done sitting alone in front of a TV or a computer. To quote the great musical producer, Oscar Hammerstein, love isn't love until you give it away. Jesus showed the disciples the full extent of his love. How? By donning a servant's towel. John 13:1. So, fast forward, modern day, nobody's wearing well, in Phoenix we wear flip-flops, but and yeah, my feet get dirty. So, but where can we apply this in modern day life? Anywhere. Absolutely anywhere. And I don't mean washing their feet. How about tomorrow at the office, or the warehouse, or the job site? Your workplace can become a sacred place where God's presence blesses the mundane, day-to-day routine, because the love of God within you wears a servant's towel. And again, everybody gets to keep their shoes on. Oh, hey, Bill, let me make those copies for you. Mary, I'll cover your calls. Go ahead. Enjoy your lunch. Hey, man, what's wrong? I know I don't have all the answers, but I can listen. Want to talk? Paul bottom lines it by writing, through love, serve one another. So today I encourage you, go out of your way to serve someone today. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.